Hi, Pete Wodgen here, Next Level Wealth. Today's workshop, we're going to look at some recommended resources. So we're going to go through 10 books that I recommend, or 10 resources that I recommend. You don't necessarily have to read all of them, but I'm going to give you my summary, and where you find something that might be of interest, then you can follow it up. So let's work through those in order, and let's start at the beginning with taking a look at why extra reading and extra resources are worth a look. So this is a brief summary of what we're going to cover. So I'm going to go through, they're not all books. One of them is a TED talk, for example, but it's mostly reading. And I'm just going to give you my bullet point overview of each of the recommended resources. And when you've got the time or inclination, particularly in some of the subjects that might be of interest to you, then you can follow them up in your own time. So in terms of why, little quote here from Charlie Munger. He said, in his whole life, he's never known any wise people who don't read and read regularly. So what it's really all about is personal development, or the concept of Kaizen, which is a Japanese word meaning a constant and never-ending improvement. Reading is a great way to continue to nourish the brain, to educate and to build expertise. The great thing about reading is that it gives you the opportunity to spend time with people who are smarter than you in their respective fields. So we can't always network with the most successful people, but books allow us those insights. And I don't think it would be any exaggeration to say that discovering reading, initially about investing for me, but eventually self-improvement, it would be no exaggeration to say that that was a life-changing event for me when I was in my mid-20s. So first I was interested in money and investing, but later that expanded into self-improvement and that expanding into the search for significance. So there's limitless amounts out there you can learn. So I'm just going to try and distill that into a series of resources that you can tackle. So I'm going to start with a very popular book, probably my favorite. So the first resource is Tony Robbins' Awaken the Giant Within. Now, Robbins' books tend to be pretty thick, so not everybody is a natural reader, I get that. So I'm going to suggest, I'm going to briefly summarize what he talks about, and then I'm going to suggest just one of the exercises from the book. So Robbins' key point is that instead of allowing life to carry you as if being dragged towards a waterfall, he's suggesting that you can take control by mastering your emotions, by setting some key goals, and most importantly, taking decisions and actions towards those goals. So Robbins is quite keen on that same concept of Kaizen. But if you haven't got time to read the whole book, let's take a look at one of the key exercises from the book. So this is one of the most important exercises from Robbins' books. He says you should take a look at each area of your life, so physical, mental, emotional, and so on. And he says to try and picture where you were 5 years ago and give yourself a mark out of 10 for each of those areas of your life. The reason he suggests that is because I think sometimes we don't give ourselves enough credit for how far we've come. I know certainly I don't. And when you look back 10 or even only 5 years ago, it's often hard to imagine just how far you've come over that time. So that's why I suggest doing that as a starting point, and then to do the same exercise for your life today. Now, doing that exercise could give you one of two results. Firstly, you could see that you've come a long way, and that's great. Or secondly, you could discover that, well, you haven't made really the progress that you might have wanted to, and therefore that can be a call to action. It's a signal or a sign that you need to do something different. And the third part of this process is then to visualize where you might be in 5 years' time and give yourself marks out of 10 for where you want to be in 5 years' time. Now, ideally, I might suggest you'd be scoring 10s in all of those categories, but that's really down to you and how you visualize the future. The second part of this exercise then is to set some more specific goals across 4 parts of your life. So Robbins suggests 4 buckets. So some personal development goals. For example, you might want to learn a language or learn skills in a certain field, whatever it may be. Secondly, to set some business or financial goals. Thirdly, some toys or adventure goals. So if you're interested in travel, for example, or whatever it may be. And fourthly, to set some targets as a means of giving back, because that's where you can get a sense of contribution and gratitude. And then within each of those categories, set yourself maybe half a dozen or 8 goals that you can work towards. And then you need to actually commit to taking some action, and not least to set a deadline for each of those goals, because without a deadline, goals are just a dream. So you need to write down when you're going to achieve each of these goals by, and then commit to taking some action today towards those goals. Second resource I'm going to recommend, this one a bit less time intensive. It's just a 15-minute video that you can watch. I've just put the link up here so that you can find it online. Steve Jobs talking about the pursuit of your dreams. One of the key themes from this talk is that if there's one thing we've all got in common in life, is that we're all going to die one day. So what Jobs tells 3 very interesting stories from his own life, and his key point, if you had to summarize it, is that you should try and love what you do and follow your passion, and try to have faith that the dots will eventually connect. We all like a sense of certainty, but if we could predict the future, well, there would be no point in living. So he's saying, well, spend your time doing what you love doing, and to have some faith that eventually it will all work out for the best. And often, as he points out, some of the biggest setbacks that you experience and the biggest defeats and knockbacks, they often happen for a reason. You just may not know that reason at that point in time. Well worth the watch. Thirdly, now I know a lot of real estate fans doing my programs. Very difficult to pick one book to talk about real estate, particularly as real estate cycles and trends change over time. There's a good reason why this book is now being reprinted and a 10-year anniversary, and that's because it takes some timeless principles from earlier cycles and just applies them to the property markets, largely with an Australian twist. I think the key points that you will take away from this, from a pure numbers perspective, is capital growth that creates wealth in real estate, which is why the author Michael Yardney recommends residential property for most average investors. Secondly, to take a long-term outlook, because it's the compounding capital growth that creates wealth in real estate. And thirdly, a really good explanation of the power of leverage that magnifies good and bad results. So of course, because of that, you've got to use leverage or borrowing sensibly. But this is just a really good overview of how to create wealth through real estate. The next resource, and this is one you don't necessarily have to read all of it if you don't want, but a key takeaway point to understand from this book. It was a study that was done some years ago in the US. It looked at a sample of millionaires and their personal lifestyle and spending habits. And the key takeaway point was that most millionaires don't live extravagant lifestyles. They don't drive Bentleys or Ferraris. Most millionaires have modest spending habits. They are generally not wearing flash watches or anything like that. Most people who were millionaires back in a day when millionaire meant something, most of them were people with modest spending habits. They spent less than they earn and they invested the difference sensibly for the future. Timeless principles, and they still apply today. Now here's a book on the Australian stock market. Not everyone's cup of tea because it's a book that is 100% stocks and 0% real estate. In fact, it's quite vehemently anti-property, anti-real estate, which some people don't like. My personal view has always been real estate is a great way to build equity and build wealth because you can use leverage, particularly at the start of your journey. But later on, as you come towards retirement, of course, you want income. And this is what this book does so well, is to explain how in Australia we have high dividend payout ratios. So the income from the stock market is very strong and attractive. The time of preparing this workshop, at least, the stock market in Australia is taxed very favourably too. And what Thornhill, the author, promotes is a form of low-cost investing. So you're not paying expensive fund managers to manage your money, keeping the costs down, taking a long-term outlook, and instead of watching the ups and downs of the stock market from day to day, to instead focus on those relentlessly increasing dividends over the decades. And what he shows very well in his book is the accumulated returns from the stock market. And indeed, in this chart here, you can see that over the long run, the returns are spectacular, particularly from certain sectors of the market, namely the industrials, much more so than the resources sector of the market, and certainly much more so than the real estate trusts, which tend to pay out high payout ratios in the looked at in a year one basis or on a spot basis, but over time you don't get the same growth that you do from the self-sustaining or self-perpetuating industrials companies, so the banks, insurance companies, healthcare companies, other industrials. So what he's showing in this book is the power of compound growth and the ability for investors to generate income from the stock market. Very, very simple principles, but incredibly powerful. Now, this is a book by a chap called Howard Marks of Oak Tree Capital. It's a slightly more thoughtful book, and what Marks is promoting is what he calls second level thinking. So he wants investors to consider not only the returns from their investments, but also the risk that you've taken on to make those returns. What Marx is saying is that some people might make money quickly, but that doesn't necessarily make them smart if they've taken unnecessary or undue risks to make that money. He quite rightly points out that all asset classes will go through good times and bad times, and he prefers to talk about a pendulum effect, and instead of the traditional market cycle. But the key point, of course, for somebody of Marx's mindset is to buy assets, good quality assets, when they are cheap, when they are unloved, and when sentiment is low. Now, of course, it's very difficult to do this because when the media is screaming about the worst of times, it's very psychologically very difficult for most people to get into the market, when most people are doing the exact opposite. But That is the essence of value investing. It's not following the herd. It's actually going against the grain and being a contrarian. Great book, really simple, plain English and timeless principles for any asset class. A couple of books here by an English author, one-time professional table tennis player, Matthew SYED. A couple of books. His book called Bounce was a very good explanation about the myth of talent. He often was told as a youngster what an amazing talent he had for table tennis, which he took issue with because he believed that his talent, if you like, was actually down to hours, weeks, months, or years of practice, repetition, just doing day in, day out, practice the drills and the skills of becoming a professional table tennis player. And he applies that to many different fields. The key takeaway being that it is practice that makes perfect, and hard work is at least as important as natural talent, if not more so. His other book, Black Box Thinking, another great book that he's written, it's a book that talks about learning from mistakes. So the aviation industry he cites as a classic case in point. Where there is an accident, the black box is seen as a valuable tool for learning from what's gone wrong, so that it doesn't happen again. Unfortunately, most humans, we tend to try to play down our defeats or setbacks. And he notes, for example, in the healthcare industry, most doctors having taken maybe 7 years to qualify as a doctor, they don't believe they're expected to make mistakes. And although the healthcare industry is full of experts, there is not the same degree of investigation into things that have gone wrong. They tend to be played down or covered up. So his key point really from that book is to see mistakes as valuable opportunities to learn and to do things better the next time around. Great book again. Now we're on to a couple of resources I'm going to suggest that are for more advanced reading. They're not compulsory by any means, but nevertheless very interesting. Now, TALEB is not everybody's cup of tea because he's quite a direct sort of person. He likes to stir the pot, but nevertheless, he's a thought leader in this field of unpredictability. Good explanation of the way TALEB sees the world. Thinking back to when I studied history at school, we were always told, well, World War II happened. It was inevitable because World War I had finished and Germany was punished unnecessarily, too hard, and this inevitably led down this series of events to World War II. And that could be applied to any number of historical events, which we see in hindsight as having been inevitable, an inevitable progression through what has actually happened. But what TALEB challenges us to think is, well, consider back 25 years ago, even the Bill Gateses of the world, they could not predict how the internet would take off in the way that it has. So if the most the thought leaders of the day, the most intelligent people in those fields couldn't predict where the world has gone, then what hope for the rest of us? And so what TALEB is arguing is that history doesn't move in this smooth progression that we see in hindsight. Instead, it takes dramatic leaps in a different direction that nobody had anticipated. So when you think about what that means for us today, well, we need to be prepared for sharp changes of direction. for things that we can't even anticipate today. So there are a number of strategies that TALEB suggests from an investing point of view to expect the unexpected, but also from a business and personal lifestyle point of view. If you build up a business with a lot of fixed overheads, large salaries, well, that could see you tied in to a certain course of action and make it very difficult for you to adapt or be agile. So he suggests keeping an open mind and being prepared for potentially different futures that we can't imagine. And also taking some long shots with low downside risk. So writing a book is a great example. You invest some time, but you don't invest much capital in writing a book. And as Taleb himself has shown, you can write bestsellers with very little downside risk and a lot of upside risk. But that's just one example. There are many others you might take. Again, a bit more advanced reading. Daniel Kahneman, Nobel Prize winner. I think this is a longer and more detailed read than I can cover today, but this is more for people who want a bit more, some advanced reading. I think the obvious thing to take that you would immediately take away from the title, that there are different ways that people think, and for investors and people in business, we need to try to move away from the instinctive or emotional way of thinking, which is our natural reaction to events as they occur, and to try to take a step back and take a more logical or deliberate view of the world, which is what he calls system 2 thinking. It's much less emotional, but it's actually important to think with a clear head. A couple of other key points that Kahneman raises. One is that we tend to think we get the full picture, but what you see isn't all there is. We don't see the universe as it is. We only see a very small piece of it. And in a similar vein to the Howard Marks book, he talks about mean reversion, so meaning that essentially things go in cycles, particularly financial markets, and when things are cheap, they won't stay cheap forever, and the same for when asset prices are expensive. Eventually they will revert to an average or a mean. There's a lot of detail in this book, but there's some real gems in there. And this is the final of the 10 resources I'm going to recommend. Now this is another more detailed or advanced piece of reading. And now there is much more in this book than I can possibly summarize, because it's a series of different ideas. But some of the great points that you can pick up in here is particularly never to trust financial projections or predictions, because they are almost invariably wrong. And if somebody gets something right one year, not to place too much stock in that, because the next year they will be wrong. So people tend to see these gurus who've predicted one thing correctly, but the next year they'll be wrong. And also to take into account people's vested interest. If somebody's trying to sell you something, you should step away, because if it's a financial product or a business idea, if somebody's trying to impress it on you, they have a vested interest in that sale. They're more interested in their results than yours. And the same goes for biases. Now, we all have personal biases, and it's important to recognize what they are, and to understand that we all have our limitations. It's a difficult thing for us to do as humans, but the more we can recognize that, the better. And I suppose just one of the key points of many is to recognize that people would rather be wrong following the herd than be right and go against the grain. It's an unusual human trait to find safety in numbers, but it often leads to very poor results because people follow the crowds, and that's how financial bubbles and overvaluations happen. Now, if you want any more reading, I'll just throw in a few more here. By no means essential, but Predictably Irrational, great book on human psychology and the way we act is actually more predictable than we think. Stocks for the long run, some tremendous common sense in that book. It's just a really good explanation how the stock market works. And in a similar vein to not trusting financial predictions and projections, The Fortune Sellers, another great read. And yes, over the years, a lot of people have made a lot of predictions, but as we all know, the predictions often tell you more about the person making the prediction than they do about the prediction itself. So just to summarize for today, reading and consuming other resources is very important for ongoing education and self-improvement. Most people these days are busy, so it's difficult to commit to reading 4 books. If you can, fantastic. If you can't, finding summaries is at least a very good starting point, and that's really what I've tried to cover today, to give you some key summaries of ideas, and when you've got the time or inclination to follow up on some of those, and main takeaway is just to keep on learning. It goes back to that concept of Kaizen, constant and never-ending improvement. If you commit to that, then the power of compound education will see you get amazing results over time. Just like in Robbins' exercise, it's often hard to give yourself credit for how far you've come over the last 5 years, and on that basis, the next 5 years could be equally amazing. That's it for this workshop. Good luck and enjoy the reading. The most important point of all, never settle, keep learning and keep educating.